Well, South African bonds traded slightly firmer late today after a successful weekly government bond auction earlier in the day. And despite the flat rand for the most part, Rhandzo Mukansi from Futuregrowth Asset Management joins us on the line now for more perspective on this space. Thanks so much, Rhandzo, for your time today. So lots of debate at the moment around whether or not bonds are already reflecting South Africa's sovereign debt as at junk status prices, possibly some saying it's been over-accounted for. Where do you sit in that debate?
We as a house think that sovereign debt is priced for sub-investment grade rating. If you're to look at RCDS, both in absolute sense and relative to other BBB minus rated countries or EE plus, we're pricing at 315 basis points. And I think relative to BBB sovereigns, we are reflecting a sub-investment grade rating. If you're to look at our local currency spreads, that's South African 30-year rate or 10-year rate relative to your respective U.S. rate as well. The spreads there are reflective of a sovereign rating downgrade.
Yeah, you've compared it to European spreads, even if you're looking at Brazil's. I mean, those spreads not as wide there, right?
No, not as wide, and I think it does reflect worse fundamentals in Brazil than you have domestically. South Africa is often compared to Brazil. Maybe a comparison which I think is flawed because you've basically had an abdication of fiscal management in Brazil, and that does not relate to a South African context. I think we have seen a kick up in spreads both locally and in Brazil, but I think that comparison might be a bit flawed, and pricing is reflective of South Africa's fundamentals at least being a little bit better than Brazil's to our minds.
So given what you've said then, Rhandzo, talk us through the kind of activity you're seeing in the bond market space, because in particular, we've had more interest being shown to South African local bonds by foreign investors.
We've seen foreigners pick up 19 billion of our bonds. That's year to date. Last month, we saw 16 billion of foreigners' net purchases of South African bonds, and I think that is reflective of a market which, post-December's market sell-off, was sold off, and fundamentals maybe not entirely reflective of that big move we had in December, and we've seen a bit of a paring back. And foreign participation, I think, is indicative of that.
Rhandzo, where exactly are you seeing opportunity right now? We were chatting off air earlier this afternoon, and you mentioned inflation-linked bonds in particular are blinging bright on your radar screen.
Yeah, inflation-linked bonds seem to be an interesting place right now, I think, especially with regards to a nominal bond space, which is pricing in a lot of sovereign risk. So inflation premium, inflation as evidenced by February inflation print of 7.2%. January's print was 6%, that's headline inflation. And inflation protection seems to be sensible in view of heightened inflation risk domestically. So we think it is a safe place in light of heightened sovereign risk that we are seeing priced into the nominal bond space. The market as well was in favor of inflation bonds in Friday's auction, and we saw really, really strong bids across the three stocks that were issued in the LB space last week, Friday. They were I-2038 and I-2046 and the I-2050 as well. They cleared well below mark-to-market on Friday, and I think it is reflective of a market that seems to have favor for inflation-linked bonds at the moment.
Well, talking about activity that came through on Friday, we had Treasury saying that its dollar bond had been more than 2 times oversubscribed. Were you at all surprised by that? A lot of the interest on that coming through from European investors and those sitting in the U.S.
We weren't surprised by that. It's not a market that Treasury taps into often. Relative to our local debt to GDP ratios, our foreign debt is quite low at around 12%. That's below Treasury's prudential limit of 15%. And given that it's not a market Treasury taps into often, and given preferential pricing, we thought it was a fair auction.
Very quick comment, Rhandzo, on the rand. I mean, it's been a pretty volatile trading session today, but for the most part, rand strength filtering through. We've had some commentary or commentators suggest that we're looking at a rand that's possibly 30% undervalued at this stage. Where do you stand on the local unit?
Depends which way you're looking at it. I think if you're looking at pure interest rate differentials, then there's a case to be made for the rand being oversold. But I think we do have to filter in domestic fundamentals into that, primarily being your fiscal balance as well as your current account deficit. And given how high the current account deficit is, and I think the fragility of domestic fundamentals around that 1470 to our minds, I think is fairly priced considering those fundamentals. Year to date, the rand has pulled back quite a lot of its losses last year, and it's the second best performing emerging market currency relative to the dollar, and it's maybe an unwind of over pessimism to emerging markets generally last year, and maybe specifically the rand towards the tail end of last year.
Well, let's leave it there. Rhandzo, thanks so much for having joined us on the line this evening. Rhandzo Mukansi is from Futuregrowth Asset Management.